Hi, I'm Taylor Owen. From the Globe and Mail, this is Machines Like Us. So if you listen to the last two interviews I did on the show, you'll have heard some real skepticism about AI. But if you look at the stock market, you won't see any of that uncertainty at all. Since the launch of ChatGPT in late 2022, NVIDIA, which is the chip company used in a lot of AI systems, has seen their stock go up 700%, which briefly made them the most valuable company in the world. And it's not just them. The entire S&P 500 hit an all-time high this year, in no small part because of AI. And a new report from Microsoft says that generative AI will add $187 billion to the Canadian economy in the next 6 years. As wild as these numbers are, it gets even wilder. Some researchers say that our per capita economic growth rate will hit 30% by 2100. And in case that doesn't mean anything to you, as it doesn't for me, 30% growth means that in 25 years, we'll be 1,000 times richer than we are now. It's hard to imagine what that world would even look like and how the average person might fit into it. But we have some help trying to figure this out. Rana Foroohar is a global business columnist and associate editor at the Financial Times. She's one of the best people in the world to help us understand big shifts in the global economy. So I wanted to have her on the show to help me work through what these wild predictions really mean and whether or not they'll actually come to fruition. So I'm so grateful you've taken the time to do this because I just have so many questions about this wild speculation surrounding the role of AI in our economy. And I want to start with some of these more bullish and even crazy speculations. So what does it even mean to be 1,000 times richer than we are now?
A really good question. I think it speaks to a lot of wishful thinking, to be honest with you, which is really what I take away from the AI debate so far. I'm old enough that I've been through many tech hype cycles. And, that's not to say that there isn't a lot to talk about with AI, that there aren't some really interesting potential productivity gains, some interesting gains in terms of creativity and innovation. But the fact is, we don't know yet what this new technology is going to bring and how quickly it's going to bring it. And yet the conversation and the stock prices and the valuations of companies, are reflecting a sort of a baked in growth trajectory that I think is a little bit naive.
I want to get to that skepticism in some detail, but how are they coming up with these numbers? Like it is speculative, clearly, but there's theory that underlies some of these big projections. Am I right?
There is. Theory is a strong word. I would say more guesstimates because, let's face it, who's driving the narrative? It's mainly the companies that are rolling out these products. And there's very little good algorithmic checking of the business models here, the way in which the technology works. I have yet to see an experiment in AI that boosts productivity across the economy at scale. I've seen a lot of interesting small experiments in, yes, it can do this, it can do that. Imagine if we could say, replace all the journalists or all the nurses, wow.
Imagine how rich we'd be if we could replace all the journalists.
All the jobs, funny enough. So there are projections along these lines, and there are some projections that people make sound a lot more scientific, but frankly, they're not. They're very much based in speculation right now. The valuations of these stocks are a great example of that. And you can see NVIDIA, which is the company that makes AI chips, the way that price is going up and down reflects the fact that people don't really know.
So what's at the core of these projections, though? They're saying, certainly labor could be replaced. Robots could do all sorts of different things. Mm-hmm. We might have a means of being more intelligent or more productive as humans. How did those translate into economic value?
So that's a really great question. I would say that there's kind of three streams to look at there. There's AI as a labor replacing device, and technology is often a labor replacing device. Just think about something like the scanning of your own items at a checkout, where you get your magazines and your water. There's all kinds of technologies that replace people. That reduces costs for companies. It also can increase productivity in the sense that you have fewer workers, but the system is doing more. Now, all of this is just a mathematical formula. It doesn't say anything about the well-being of society at a fundamental level, frankly, but that's one way that we think about it. The other way we think about it is AI is going to do the jobs that we're not so interested in doing: pencil pushing, numbers crunching, spreadsheet assembling. I was talking to my old literary agent the other day, and she was saying it can do a pretty darn good book proposal. So now, if we're being optimistic, we would say, hey, that leaves humans free to do a lot more interesting, creative, even more productive work, and that is technically good for an economy. And then there's the third stream, which is that AI is going to be able, this is just the theory, that AI will be able to do things that humans can't. Really complex systems analysis, things like drug discovery, really complicated logistical planning, things that you need a lot of data, you need to be able to crunch it and adapt quickly. And that could technically, again, boost productivity in an economy and thus growth.
My understanding is that some of this is based on models of the economy that equate humans with productivity in a sort of 20th century way, right? That like we build things, we engage, we have jobs, we work, and they're kind of robots are literally replacing humans, not just in society, arguably, but in the economic models themselves, right? That if you add a robot to a construction process, it's equivalent to adding a human, right? And can we do that? Like, is that a proper use of these models?
Can we do it? Well, you're making me think of this wonderful book that Darren Ajmaolu and Simon Johnson from MIT wrote called Power and Progress. And they looked at 1,000 years of technological innovation, disruption, and labor replacement. And they found that basically, yes, of course you can do that, but is it good for society? That's a big question. Typically, these things, unless they are coupled with, say, retraining for human workers, discussions about how to, hold together society economically and thus politically, then many of these technologies actually end up harming rather than helping. You could look at, say, 19th century industrialization, where there were very few labor protections. You had this sort of big dramatic increase in machinery in factories and productivity went up, but there was a huge human cost to that. And so I think that the question you're raising, can we replace humans with robots? Should we replace humans with robots? I mean, these are the great questions.
Yeah, and if the projections are based on a one-to-one replacement, what does that say about us and what we were in this system?
Yeah, we were in this system. I mean, you're getting at a couple of things which just always kind of astound me, even after 33 years of doing this job. One is that economists, amazingly, tend to sort of look at humans as cost inputs. They see labor as something, we want to get that off the balance sheet. We want to move that over here, and so the formulas that economists who frankly make policy, that we all live with in our economies, aren't always looking at us the way we're looking at ourselves. And okay, maybe you're increasing productivity and growth by replacing a human with a robot, but you're also taking income from the human out of the system. And essentially, you're also redistributing it upwards to the people that own the software that the robot is working on. So it's, potentially stretching out that inequality problem that we already have that has political impacts. I could go on and on.
I mean, I'm very curious how you approach economists in general. I mean, you report on
skeptically.
Change. I get that, but it's so interesting because you write about these big changes in the global economy, and you have people using big, high-level math models to do the same thing. And do you talk to these economists? How do you value one's opinion or model over the other because there are competing ones when they talk about AI and measuring it? And how do you do that?
Yeah. Well, I talk to economists all day long. I mean, I've been talking to economists for decades. But if an economist, or frankly anybody, I mean, I think this is a good rule of thumb for journalists in general, if someone can't explain to you in pretty simple terms that anyone could understand what they're trying to do, that tends to be a red flag for me, because I think economists, like all experts, tend to use jargon to create kind of an insider-outsider divide, a priesthood in which, they can't be questioned, and asking dumb questions, i.e. simple questions, gets you in trouble. Well, the simplest questions are always the best, frankly. And so when I am talking to an economist about a projection for the economy, I tend to just try and look at it like a smart layperson, which is how I think of myself. Can I see it, smell it, taste it, touch it? Does this pass the sort of common sense test? And if it doesn't, then I think you have to be skeptical. And frankly, you can look back in the history of financial crises and depressions, and you can see that when projections and narratives got too far detached from the real world, that's typically when you start to have a problem. I mean, look at the great financial crises. Sure, there were plenty of really complicated models out there being, crunched by Nobel laureates. At the end of the day, they failed, and many of the people crunching them really didn't know the risks that they were taking on.
And we tend to remember and lionize the ones who happen to get it right and forget many of the economists who got them wrong.
Which is most. Most of them, yeah.
Yeah. So the argument for increased productivity, for example, or even just growth in general, is fairly straightforward on the AI side if you buy the technology.
Yeah.
So do you not buy that either? Like that the tech itself will be able to do the things they're saying and projecting it might be able to do? Or is it the economic impact that you're skeptical of?
Oh, both. I have big questions right now just about the capacity of the technology. I did a piece recently, actually, because, I got a call from a longtime source of mine right after the AI narrative kind of popped. And he said, this is a guy who's been in venture capital for 40 years, a seed founder of many, many big name tech companies. He said, I don't really know, but I think it's worth looking at whether anybody has tested these models. I think it's worth seeing if you can find an example at scale that really lives up to the promise thus far. And for me, the answer is no. I have not been able to find any of that. It's not to say that I haven't been able to see any impact at all. I see a lot of kind of busy work, paperwork being done by AI. That to me is just putting on steroids some of the sort of, labor replacing software that we already have. I also would point out that it takes a long time for tech-related gains to funnel through the system. If you look at the Industrial Revolution, it took 70 years. But even if you were to say it's going to take 10 years, 20 years, that's still a long time for things to roll out. So I'm not expecting the kind of overnight bounce that I think a lot of people are.
I think in that same article, you wrote that it's the euphoria and sense of inevitability in this straightforward narrative that makes you nervous. So what makes you nervous about those predictions? And what's the downside risk of thinking like that?
Well, I mean, if you read economic history, Charles Kindleberger, who wrote about irrational exuberance, bubbles, says that this is one of the core things that happens when there is a bubble in an economy, is that you have a single narrative that broaches no contradiction. It's not like it could be great for data crunching in areas like drug discovery. It'll be interesting to see what happens in 20 years. No, it's AI is going to change the world. It's going to displace 40% of labor. You have to get with the program or you don't know what you're doing. It's very much the 1999 .com bubble narrative to me. And I lived through that. I actually, for my sins, I went off to work in a tech company in 1999, which was not a great idea.
One other thing on the sort of the projections and particularly the productivity gains I wanted to get your read on is it seems like these models and these projections don't take into account any potential bottlenecks or hindrances to inputs required to grow. And I can imagine a number of them. And I'm wondering if you what could actually constrain this growth?
First of all, that's a great point. And one thing that pops to my mind is regulation. which is certainly coming down the pike. We've seen it in the U.S. With an executive order around AI. We're seeing it in Europe. We're seeing it in the U.K. I think that there's going to be big issues, in fact, around regulation. And if you think about AI as being dependent on their ability to access big swaths of information, you can imagine in a world where people are concerned about privacy, there's more geopolitical strife, there could be limits to that in the future.
And how do you see the shape of this regulation evolving? I mean, we've seen limited debates about it so far, but in ways that really could constrain the growth of models, for example.
Yeah, well, I mean, one thing I think, and this dovetails perhaps with another bottleneck, I think a good bottleneck, which is that labor is becoming much more concerned. Workers are becoming more concerned about intangibles like artificial intelligence, like software, like data. They're saying, hey, wait a minute. This is being harvested from us as workers, and we want a slice of it. We want control. Best case in point so far would be the Hollywood strikes. How AI is used or whether AI is used is something that labor fought for and was able to get a certain amount of control over. I think you're going to see a lot more of this, particularly as more and more economic value moves into areas like technology, like intangibles. I just think the math isn't going to work unless companies start to share some of this with workers.
Yeah, and particularly when you see the scale of investment. I mean, I saw that $1 trillion is scheduled to be invested into this space. I mean, it's
right.
Like, when you do that, something happens, right? Like you can't just invest $1 trillion into something and not have these big repercussions.
Yeah, and as you're talking about the investment, I'm also thinking the investment of natural resources, which is another potential roadblock.
Absolutely.
The water, the energy consumption is just tremendous, and this is coming at a time when we're trying to orchestrate a clean energy transition globally, and so I feel pretty sure that we're going to start to see some blowback. In fact, I was speaking recently to an energy analyst that was talking about how a number of grids in the U.S., regional grids, are being tremendously strained by the growth of AI. So I can't imagine that tech isn't going to have to answer for this, pay for it perhaps, with premiums on energy usage if indeed it's able to go through.
So one of the things you've documented incredibly closely over the years is the rise of big tech companies. And I'm wondering, when you look at where they are now, whether you see this moment around AI as an extension of their power or is something new emerging?
I think it probably is an extension. I mean, in some sense, there are different players that have risen. I mean, Microsoft was really an also-ran company until it came out with OpenAI. But overall, you can say, yeah, we've still got 3-5 companies that are really representing the majority of the wealth creation potentially here. And they represent the majority of the stock market too, which in that sense, AI has another effect that we may not be thinking about enough, which is the impact on the financial markets and the financial market stability as a whole, because wealth is so concentrated right now. I mean, even before NVIDIA's boom, 40%, sometimes 50% of the market cap of the S&P was in the big tech stocks. Now you see, I think this past year or so, it was over 30% of profit margins were represented by NVIDIA's growth in the overall index. And when you get an index that's that concentrated, you're looking potentially at a big correction. And then you think about how represented that portfolio is in the retirement of average people, in pension funds, and how are those dominoes going to fall?
Do you think this bubble could burst, and what does that look like if it?
I have no doubt it will burst, 100%.
And what does that look like?
Well,
like what would precipitate that?
What would precipitate it? I mean, let me go back and maybe set the stage a little more broadly. I have been thinking that we were due for a big market correction probably since 2012, 2013. We got the great financial crisis, and what happened was we solved the problem of debt with more debt. We got a lot of quantitative easing. There's now a record private debt bubble around the world. Okay, so fast forward a few years before the pandemic, many of us, myself included, were looking for a significant correction, 20% correction, maybe 30% correction. That would have been historically normal. But then we get COVID and we get the war in Ukraine, and we start to see the U.S. in particular funneling a lot of fiscal stimulus into the economy, which I think was appropriate, giving consumers and folks that have lost jobs because of COVID money to spend. A lot of that money went back into the markets. That then continues to buoy asset prices. Now, move to the last few years, just when that paradigm was starting to change and we were starting to see rates go up and we were starting to see central bankers say, okay, the music's going to stop now. We need to deflate this bubble. I mean, they've used the term bubble, central bankers, to talk about stocks right now. It's not like it's a big mystery. But then you see AI come onto the scene. And I just find it really interesting at a time when rates were starting to go up, when some of the other big tech stories like Web 3.0, crypto, the metaverse were kind of like, we're not buying
None
it.
of them quite stuck, right? Like
They
were trial
stick.
balloons. Right?
Yeah, they were trial balloons. None of that's working. And then all of a sudden, AI. And then we get another burst of stock growth. And all I would say is, I don't want, believe me, I don't want the markets to correct. I've got most of my money in stocks because there's very few other places you can put it, although I have a lot of gold too. But you just look historically, and these valuations, it would be historically unprecedented, like in the last 300 years that we've been tracking these sorts of numbers. It would be very unprecedented for us not to have a big correction. And what would trigger it? You asked what would trigger it. Well,
like what kind of event could do that?
Oh, I don't know. Donald Trump winning the election in November.
But he's all in on Bitcoin, won't that?
The rise. Okay? Oh, well, that itself may be an indicator. The rise of the far right in Europe, the sense that rule of law. I mean, think about what makes business feel good. The rule of law. Well, in the U.S., we just had a Supreme Court ruling that's going to allow the president immunity from any kind of wrongdoing committed while in office. I mean, these things, they don't happen all at once, but eventually you start to get a sense that, is the U.S. kind of becoming like an emerging market? Is there a certain amount of political risk here that companies start to feel uncomfortable with? And it hasn't happened yet, but it could happen. All I would say is I've never seen a business cycle that has been stretched out so artificially as the one that we're in right now.
Clearly, one of the most intimate, personal things people are feeling when they hear the discussion about AI is that the narrative of people losing jobs and jobs becoming irrelevant and their livelihood is a direct connection. It's not a macroeconomic theory.
Yeah.
It's my job might be gone because of the things you're building, right? There's a very visceral connection. So who will be hardest hit by this? If even just in like the most conservative predictions about what AI could do, whose jobs do you think will be lost?
Yeah, it's a great question. So, interestingly, it's not going to be as much, the older white men that were, say, hit hard by the hollowing out of the Rust Belt or the loss of manufacturing jobs. It's going to be women who are disproportionately in service sectors that are going to be affected by AI. Minorities, in many cases, will be disproportionately affected. Even folks higher up the food chain. I mean, just to give you an example, at the Financial Times, we recently cut a deal so that OpenAI would train on our content. Now, I don't know, if you call me in 5 years, will it be me or will it be an algo,
What did you make of that deal? I'm very curious.
Well, I wrote a blog about it saying, I don't know, I'm not so sure about this. I mean, to be fair, the business rationale, which many, many companies are making the same deals, is that the tech companies are taking this stuff anyway. We might as well get some licensing fees for it.
That's mobster rationale, though,
it's
right?
It's mobster behavior. It totally is mobster.
Like, we're going to take it anyway, so might as well take the payout and indemnify us from any liability for having taken it. This is
absolutely
really something.
Absolutely. But I also have to think that, I just in my job, I consume digital media. I consume a lot of media. I mean, I wake up, I actually still read in print 3 newspapers cover to cover because I like the serendipity of not being in a informational silo and not being led somewhere, but actually seeing what the editor thought was important. Then I go through my email. Then I read my digital media reports. But by, 11 o'clock or so, I'm in the world of human interaction. I'm talking to my sources. I'm learning things that I think it would be very difficult for me to imagine an AI might be able to capture my voice or my general approach to something. The AI is not going to know that I just spoke to someone in the White House 10 minutes ago and they told me X, Y, or Z.
So you think?
Maybe. I mean, it would, that almost starts to get into the realm of I don't know, the psychic. So,
or mass surveillance, one or the other.
Or math. Well, that's a different topic. Yes.
So look, if people are losing jobs, I mean, you quote this wonderful Freud line that love and work are the cornerstones of our humanness. And so the work isn't just about productivity, and it's not just about economic viability. It provides something to us. So what are the implications of taking that away? What happens to society?
Well, we already know what happens. Deaths of despair. Angus Deaton and Ann Case, 2 really amazing economists that I respect so much, did a book on this, looking at the way in which the loss of jobs from deindustrialization led to suicides, led to drug addiction, led to the tearing apart of communities. A lot of, in this case, the men, mostly men that were put out of work, out of factory jobs, were less able to marry. They were less able to have families. Work is really, really important. And one of the things I've always found amazing and really kind of disrespectful, I guess, is when I hear folks in Silicon Valley talk about UBI, universal basic income, this idea that, there's going to be so much wealth creation, but not enough work. So, hey, we're just going to hand you a check. Well, research shows us that's not the same thing. Fine, I'll take the check, particularly if you're mining my data to get it, to get that value. But that doesn't give me the interaction that you and I are having right now, exploring this topic, which we are doing as part of our jobs. It doesn't give you the community that you build around work. I mean, these are the cornerstones of society, really. And I think it's just so Panglossian to think that we can just kind of wave that all away and be okay.
Mm-hmm. What are the political implications of that?
Well, I always think about the fact that the reason I think that we got Trump and Bernie Sanders, different sides of the same coin, more extreme polarization in politics, a far right, more nationalism globally, is the fact that about 10% of the manufacturing workforce was disrupted. We are about to see 40% of the higher end service workforce disrupted. And I just think it's amazing that there's not more conversation about that. I think you probably are going to see, once the presidential elections are done in the U.S., I think whoever comes next, it's going to be a topic that leaders are going to have to start fielding.
How does that play into how AI changes the nature of work and what the role of the worker is in that?
Well, I think it has 2 impacts. One, sadly, is to make managers and CEOs probably want to displace even more labor because they don't want to have to deal with these troublesome people that want meaning and respect and pay and
benefits,
stock options. What? Let's see how much technology can do it. But the thing is, it becomes really kind of Marxian. It's like a snake eating its own tail at a certain point. I read an interesting piece, I think it was in the FT, about how one of these analysts that studies technology was estimating that 70% of a CEO job could be done by AI. So, be careful what you wish for, corporate leaders of the world.
So, a couple more things on what the state is doing in this. One of the things seems to be just a return of a sort of economic nationalism that is quite striking when you see that around chips, for example. and the speed with which
Yeah.
blockades are being placed on chip production or EV production, which is sort of tangentially related. Or what is the relationship between that and this speculation in the economy around AI right now?
Well, if you think about why are rich countries, the US, parts of Europe, why are they starting to re-industrialize? Well, they're doing that for a couple of reasons. One, there was a sense that too much outsourcing of the industrial commons, mostly to Asia, in particular China, led to job losses, which had this populist political impact that we've been talking about, but also left the world less resilient to things like supply chain shortages. I think AI is going to be potentially like another China shock, but on steroids, because the China shock, this deindustrialization that I'm talking about, and it's called the China shock by a couple of academics that did a paper quantifying the effect, that was just about 10% of the workforce. We're now talking about 40% of the workforce potentially being shocked. And so I think you are 100% going to start to see individuals saying we want this value back, maybe countries saying we want to own more of this value ourselves. Certainly tech decoupling between US and China is a part of that story.
So, I mean, I guess the other thing that governments could do, as you mentioned earlier, is regulate. But it seems like we're really split in the AI governance conversation between risk and harm and what we can do to mitigate risk. And on the other hand, turbocharging the economic benefits. So you have governments trying to do both of those things at the same time. And maybe, can they?
Well, yeah. And there's also a national security angle on this. You know, one of the reasons that AI is, I think, moving faster in the US in particular than it would otherwise is this sense that, oh, well, China's doing it, so we got to do it. Otherwise, we're going to fall behind. And that's a line that's definitely being pushed by the largest tech companies that are trying to lock themselves in as the sort of preferred US providers as Chinese tech companies get banned and there are more limits on trade and capital. Again, I mean, I would just go back to first principles and say, is this technology benefiting society as a whole? Where are the protections on labor? Where are the protections to privacy? How do we make sure this stuff doesn't get out of control? I mean, you saw just last year when AI really took off, you saw a lot of technologists coming out in an open letter and saying, hey, I think we need to take a breath. We need to slow down here. So even the industry itself is concerned.
So how do we then regain some agency in this? I mean, hearing you talk, it feels like things are sort of out of our control and spiraling. And how do we take control of this?
It's a great question. I have to say I'm more worried actually about AI than I was even about surveillance capitalism. You know, this idea of our data is being monitored, our preferences are being looked at online and then monetized. That felt like it was easier to understand than AI. The AI narrative is really, really opaque. I mean, how does it work? What are these large language models? Where does this stuff come from? I mean, these are pretty basic questions that I'm not sure even experts can answer clearly and well. And I think getting a really transparent narrative is a good starting place, because I just look back in my own career, whenever there's problems, it's that there's not transparency and there's not a clear narrative. Again, think about the run-up to the great financial crisis. What are these things called CDOs that suddenly explode? I mean, what the heck are they? Not even the people in the banks knew, it turned out.
Well, we needed like a movie 5 years later to tell us after the fact.
Yes, exactly. Right? And Margot Robbie in a bathtub. Exactly. That's the only way we could pay attention.
So how do we get that transparency? I think that's exactly right.
Maybe we need Margot Robbie in a bathtub to explain AI.
Maybe that's the solution to our agency problem with this economic model. That's right. But in seriousness, how do we? Like, I think you're dead on. Like, we need to know what they know or what they think. Yeah. And how do we do? Is that a policy question? Like, can we mandate that? Or how do we demand to know more?
It's a very complex world. I think we should keep asking questions, though. We really need to keep asking questions. And I think we need to ask ourselves, how much value is being captured by workers? I mean, that is a big question. I think labor unions are going to be one of the forces that will lead on this issue. In fact, they already are making this a big issue for them. The AFL-CIO, for example, Confederation of Labor in Europe. So,
how do you see your role and the role of journalism in creating this transparency or telling the story of what this is doing?
I try to be, again, I just try to go in and ask the simple questions. And when I don't get clear answers, or when I get sort of a torrent of words and a narrative that can't be disagreed with, I just try and raise these issues and I try to be skeptical. I lived through the dot-com bubble. I drank the Kool-Aid then. I left my job as a journalist to go work in a high-tech incubator in Europe. And, it was kind of a disaster. It was a great learning experience. But it just makes me realize that I guess I trust less, having worked in business and in tech, I trust less of what anybody says, even than I did before. On the other hand, I'm more respectful when I actually see advances, so I don't want to say that there aren't good things that could come of this. I mean, just think about something like healthcare. You could imagine, here's my dream use for AI. Give a bunch of underpaid nurses AI on a tablet and let them go do what doctors do, because guess what? They're probably going to do it better, and that'll raise their wages. Same with teachers. Here's my nightmare scenario. Healthcare companies just replace all the nurses with iPads that we all have to plug in, and use in a kind of a shadow work exchange where AI is doing a job and we're feeding it information, and the companies are the only ones that are benefiting. So I try to spend my time just showing people what those scenarios look like.
Yeah. So to close here, in the very short term, what do you wonder most about this technology and what it will do? If you could know one thing in the next couple of years, what would be the most important thing for us to understand about these, or to know is going to happen?
I wonder, I mean, I don't know the answer to this, but I just wonder if AI is going to give us something that is truly new and delightful, creative, something that we couldn't have imagined. I was actually sort of transfixed and hopeful when we first started hearing about Google experimenting with AI, for example. There was a famous experiment in which there's a Chinese game called Go, and a Google app played this game, and there's apparently rules about the kinds of moves you can make, and people never break these rules in the first 15 minutes of the game. And the AI just did something totally outside the box and won this game. And one of the Go masters said it made him feel sick, and the other one said it was gorgeous and inspiring, but it was new. It was something really new and creative. That's my big question. Are we going to get something truly new, world-changing, or are we just going to see sort of iteration, faster, cheaper of what we already have? I guess that's what I'm watching for.
I love the word delightful in this. I mean, that's what I'm looking for in these technologies too, is something that is inspiring and
joyful,
adds to our humanness.
Make us happy. Yeah.
Machines Like Us is produced by Paradigms in collaboration with the Globe and Mail. The show is produced by Mitchell Stewart. Our associate producer is Sequoia Kim. Executive producers are Kathleen Goldhar and James Millward. Our theme song is by Chris Kelly. A special thanks to Matt Frainer and the team at the Globe and Mail. If you liked the interview you just heard, please subscribe or leave a rating or a comment. It really helps us get the show to as many people as possible.